A warm welcome to the Arise Exchange. This Thursday, Labor Day holiday here in Nigeria and around the world. I am Bosin Omofaye here at the Arise News Studios in Lagos, Nigeria's economic and financial capital. Now, the Nigerian equities market finished off slightly negative on Wednesday, wrapping up a bit of a turbulent month of April, taking its cue largely from the global turmoil around U.S. President Trump's tariffs chaos that kicked off on April the 2nd. Here at home, investors sank their teeth into the full year 2024 earnings of listed companies, as well as the early bird announcement from bellwethers such as Seplat Energy, Nigerian Breweries, MTN, Nascon Industries, Cadbury, and others. Now, one of the earnings that stood out in the month just ended was Seplat Energy, one of Nigeria's biggest indigenous oil and gas producer. Earlier in the week, Seplat reported a jumbo 350% jump in its first quarter revenue, cut its net debt by 17%, and pulled $305.6 million in cash from its operations and announced a $4.06 interim cash dividend. Now, the listed energy giant also informed the market that its 2025 guidance remain on track for production, capital expenditure, and other items. We've got a lot of grounds to cover in this two-part interview with my guests covering the markets and the macros on the show tonight. Welcome, Johnson Chukwu, investment banker and the group CEO at Carry Asset Management. So, a great Labor holiday evening to you. We thank you for connecting into the Arise Exchange tonight.
Thank you, Bosin, for having me. Happy May Day to all of us workers.
Thank you so much. It's good to have you. We appreciate sharing your evening with us here on the show, on the live programming. Why are you traders and investors sinking your teeth into the latest corporate earnings?
Well, Bosin, one of the things we take away from the corporate earnings that published is that first quarter of last year, a lot of corporates reported exchange losses, significant exchange losses like the likes of Nigerian Breweries. This time around, we are seeing very minimal, if any, exchange loss in the first quarter of this year. So a number of them, most of them actually, a reasonable number of them reported negative performance, profitability in the first quarter of last year. Most of them have turned the corner and are now reporting positive profitability in the first quarter of this year. You did make reference to the likes of Seplat, and you saw a jump in its revenue from about 200-something billion to over 1 trillion naira. And then we saw also a jump in its profitability. We saw the same thing in Nigerian Breweries. And virtually all the corporates, most of the corporates have published their first quarter performance showed material improvement compared to the previous similar quarter of last year.
Okay, great. You're touching on Seplat Energy. I'm sure this is one company that virtually all of you big names in the industry, as far as broker dealers, investment bankers have on your books. This is a very big indigenous oil and gas company listed on both Lagos and London stock exchanges. So it's a company you can't ignore because, again, it's a product. Oil and gas go to the heart of Nigeria's economy, by the way. But walk me through the highlights of this first quarter numbers. You mentioned about the revenue. Take me through a few other items on this particular earnings from Seplat that you think investors should have their eyes on.
Well, the first thing is to look at the top line. And the top line, as I saw, we recorded a very significant improvement. Increase. And when you look at the top line, you're looking at what is the potential, what is the capacity of this entity to make profit or to generate revenue. Because at a certain point, if you're not growing your revenue, even if you are keeping your cost, there's just a limit to which you can slim yourself into profitability. But the most important thing is growing the top line, which is the revenue. And we saw a very significant growth in revenue, which dovetailed into profit before tax. We also saw an improvement in its financing, managing of its finances. We saw an almost minimal foreign exchange loss. We saw We also saw an improvement from a negative in terms of profitability to a positive in profitability. But beyond that, we saw, sorry, it wasn't a negative, it was a very low profit that has that more than tripled. But then we also saw a huge tax liability, which means that if you look at the tax to profit margin, then it was quite high. And I think there is either that will also improve in going forward, because I think the tax reform that is ongoing, if it's passed into law, it drastically materially reduce the tax incidence on oil and gas companies, particularly producing companies. So for us, we saw positives starting from the top line. And then we also saw improvement in bottom line, which is the profitability. But we also see a potential further improvement in the bottom line as the petroleum tax industry law is amended to reduce the tax burden on petroleum operating companies.
And you think that will bring more money, more cash to the table for Seplat, for example, and his contemporaries within that sector. But if I'm an investor, you're talking about some of the key takeaways for the first quarter. Looking at the unit of production cost of oil, $12.60 was what Seplat says is able to get a barrel of oil out of the ground. Now, that's relative to current global oil prices that's been sinking from around $85 last year to now just about $60 a barrel. What does that mean to you?
You know, for me, if you look at, there's one thing they call the Blue Ocean Strategy, Boston. I'm sure you read that book, the Blue Ocean Strategy. Say, look,
yes,
if you are able to increase your the quality of your product and reduce your cost, you are going to create a blue ocean that will be difficult for anybody to compete. One of the drawbacks we've had in the oil and gas sector, particularly our upstream sector, is our cost of producing a barrel of crude was previously materially higher than what the likes of Saudi Arabia or most oil producing countries we are achieving in terms of their cost of production. With what Seplat has done, it then puts Nigeria's oil industry in a very competitive position, irrespective of the fact that we are seeing a decline in oil prices. Of course, we saw oil price in Nigeria about $65, down from as high as $75. So we are talking of a loss of almost $10. But if you keep your cost of production low at the level of $12 per barrel, then you will still enjoy reasonable level of margin. And that will mean that they will sustain their profitability going forward. So it's actually a pointer to the prospects of the company going forward.
So, what about the forward guidance for this year for Seplat? Says it's keeping its guidance unchanged, production guidance also unchanged, 120 to between 120 and 140,000 barrels per day. Says Capex guidance remains around 260, $320 million, and is holding a capital markets day in September. What are you looking to hear from the company when September comes? Or is it too long to think about what to expect between now and then?
Well, it's not too long to think of what we take. Of course, we're living in a very volatile macroeconomic environment, not just in the oil and gas sector, but the entire globe. We are living in an environment where one cannot predict with certainty what will happen to oil prices in the near future. But having said that, we have pointers, and those pointers are indications of what the future could hold for the company. I had mentioned the issue of growth in top line, which is growth in revenue. We all know that Seplat is doing a lot in terms of its gas production. It's also, you didn't make reference to its crude oil production. So in terms of barrel equivalent of oil and gas that it's producing, we've seen consistent increase. We also know that Seplat has a knack for maintaining community peace or maintaining good relation with its operating community. So we hardly hear of breach of Seplat pipelines or breach of or shutdown of their production. These are indicators of a very strong prospect that we don't expect to reverse in the next 6 months. In addition to that, I did mention that the petroleum industry tax is going to be reduced based on the ongoing tax reform bill, which will also mean that for investors in Seplat, the bottom line is likely going to improve, and you're going to see a higher level of profit after tax, which will likely lead to an increase in dividend payment.
Yeah, I'm sure you didn't miss the interim dividend for first quarter, $4.06. I'm sure you saw that as well. You just didn't comment on that. If you hold that $4.06, it's quite some. But let's move on. Let's talk about MTN first quarter earnings, that telco giant. The numbers for first quarter for the company reveals a rebound in its financial fortunes of this company. What do you make of the numbers, and how do you trade MTN's strong, at least walking out of the problems of 2023 and 2024?
A couple of problems the telco companies had to deal with a couple of issues, which are also largely behind them. One of which was the issue of exchange rate devaluation, which led MTN to report losses last year. Even starting from the first quarter of last year, we saw a loss last year. We also saw losses in 2023. Then they also had to deal with declining average revenue per user when their average cost per user was increasing because the federal government did not, for a long time, permit them to increase their tariff. In good 18 is that has also been addressed. So the performance you saw in the first quarter, where they turned from a negative in the first quarter of 2024 to a positive in the first quarter of 2023, will signpost a return to profitability for the company. Bear in mind that with the increase in tariff, which for some revenue heads was up to 100% increase and some 50% increase, above 50% increase, their revenue is likely going to increase materially to catch up with their costs, because their costs are actually already increased. So I don't expect further material increment in their costs. Their further increase will be in tandem with maybe inflation rate. So we are not going to see the kind of material increase they suffered in cost, while as the revenue going to increase. So having reported over 300 billion, I think 35 billion in profit in the first quarter of this year, I'm expecting that the second quarter will be materially higher than that, because the tariff increase happened mid of the quarter. So it didn't start from the beginning of the quarter. So they couldn't appropriate fully the benefit of that tariff increase. For an investor, I think anybody who is a medium to long-time investor will consider MTN as a hold or accumulate.
Yes, I saw MTN Chief Carl Turiola, the CEO, says yesterday at the annual meetings that the company will soon return to dividend payment. He said they've completed a five-point recovery plan. Well, what's your outlook as to when you think MTN should return to cash dividend payment? Do you think this will happen at the end of the financial year? We're just stepping into its first quarter, sort of.
Yes, Boston, it's very strange if they don't pay dividend at the end of the first half of at the end of this financial year, 2025 financial year. One, their investors are already deprived of benefit payment or benefit receipt, and the investors have been patient. And again, the inclement condition, the condition that constrained them from making payment are now behind them. They are going to return to cash, being a cash-rich business. If you look at the fact that the previous year, the MTN had actually come to the market to be borrowing from the short-term market, from the commercial paper market.
Yes.
I think, and that impacted negatively on them in terms of cost of finance. I think that will moderate as their cash flow improves, because with the increase in tariff, they should expect to increase cash receipt. Remember that most of their products are sold in cash. They hardly sell on credit. So their financing costs will reduce, and that will also flush into the net income of the company. So they will have cash, they will have lower cost of financing, they wouldn't need to borrow for short-term purposes. And I wouldn't see any reason why, with profitability returning to in their performance, I wouldn't see any reason why they wouldn't go back to paying dividend at the end of 2025 financial year.
Okay, so let's move to brewing sector. We also see a rebound in earnings of big names such as Nigerian Breweries going by its January to March results. Do you think the brewer and his peers such as Guinness, Champion, International Breweries, do you think they are now out of those macroeconomic damage of the last 2 years?
Well, I would say some of the factors, one of the headwinds they had to deal with, may not repeat itself this year. Take, for instance, the issue of exchange rate losses, which most of them booked for 2 consecutive years. I don't think Naira will depreciate beyond its opening level at the end of this year. Even if it does, it will be marginal depreciation beyond its opening position this year. So I think, remember that official rate was about 1535 at the 1536 at the beginning of this year. That's 1536 at the end of this beginning of this year. We are dealing with about 1605 naira at the close of trade on yesterday. But having said that, of course, that depreciation we saw in the month of April was because of the tariff war that was triggered by Mr. Donald Trump. So if you look at the macroeconomic environment, unless we see a material decline in crude oil production or a significant decline in crude prices, I think the country should be able to maintain reasonable within the same range of exchange rate. So if we don't expect exchange rate depreciation this year, I don't think the breweries will suffer material financing costs as they suffered the 2 previous years. So most of them are going to come back to profitability, but they still have to deal with some other macroeconomic difficulties. One is that consumer power is eroded, and I do not see consumer power being rebuilt in the current year. Maybe by the time we get towards the end of 2026, we will see a resumption of beer drinking, because as we move towards an election period, there is a lot of merriment that go with the campaigns that benefit the breweries. So, but from this year, I do not see any material increase in their top line. Even if they try to increase the prices of their products, the ability of consumers to spend more on alcoholic drink will be constrained. So I think that's a factor they have to deal with, which has not changed much. But beyond that, in terms of the losses they suffered in financing costs, in form of exchange losses, I don't think they will lock in such losses this year.
Do you have the same outlook? Just to sum it up on the earnings side, do you have the same outlook for the broader consumer goods sector? Give me that in 1 minute.
Well, the broader consumer goods sector is a bit more resilient in the sense that some of the consumer goods are essentials, and some of them are basic food items. Some of them produce basic food items. So for those in that sector where their products are essential needs of mankind, I think they will have some level of improvement in their top line because of movement in exchange rate, naira value. But all the same, in terms of unit products sold or consumed, we are not likely going to see any improvement. But naira value of their sales will improve. Volume may not improve for most of the consumer goods operators.
All right, Johnson Chukwu, the Group CEO at Carry Asset Management. Let's bring some of the recent macroeconomics into the conversation with you after this break. Stand by, everyone, stand by. We'll be back with you. This is the Rice Exchange. You're welcome back to the Rice Exchange, this workers' holiday. The markets are reopening into the weekend tomorrow, Friday, and we expect a few economic data on the street, such as the Purchasing Managers Index, among others. In the meantime, some of the external reports and ratings on Nigeria have signaled an improvement in the state of the country's macroeconomic conditions, which includes a stable and flexible exchange rate, a savings from fuel subsidy removal, a trading surplus on the back of higher non-oil exports, such as cocoa, among other variables. Let's take all of this and more to the market street now as I welcome back to the show my guest, Johnson Chukwu, investment banker and group CEO at Carry Asset Management. We thank you so much, sir, for standing by on the show. Let's go macros a bit. Do you agree that the economy is turning the corner and on trajectory for growth, going by some of the recent external reports, such as from Fitch Ratings, JP Morgan, the World Bank, the IMF, and others?
Yeah, Boston, if you look at our performance in the first 3 months of this year, which is January to March ending, there are indications of recovery. But unfortunately, the vulnerabilities of the economy are such that those gains may be reversed or had partially reversed in the month of April. I'll give an instance. We saw a consistent decline in inflation rate. Of course, unfortunately, by the time we got to March, the inflation rate had ticked up again, moved northwards again to about 24%. But the January and February inflation figures, we saw declines. So if you look at January and February figures, you will see, okay, consumer price level is coming down. We saw stability in the exchange rate. In fact, we saw appreciation at the parallel market rate, which opened at 1,607 naira. And by the end of March, it closed about 1,538 naira, which for anybody looking at it would say you saw even appreciation in the exchange rate, both at the parallel market and official rate in the first quarter of this year. So if you look at these variables, declining inflation rate, stability in the exchange rate, a GDP growth rate that came to last quarter of last year was about 3.84%. So we are indications of improving economy. But because, unfortunately, like I said, because of the vulnerabilities in the economy, which will mean that if oil prices drop drastically, every of these variables that are improving now dovetail or nosedive, which we saw immediately Trump came up with his Liberation Day announcement on tariffs. We saw Naira come under pressure. Naira had to depreciate to as low as 1,640, 1,660 Naira to dollar at the parallel market rate, when the beyond 1,620 Naira the official window. We saw pressures in price levels increase, which I said by the time we got to March, we saw the reversal of the gains we saw in inflation rate. So first quarter of this year, we are pointers of a recovering economy, an economy that you could actually say that we're seeing burden leaves. But because we are still a fragile economy, any major global macroeconomic factor that affects oil prices will have effect of possibly reversing the little gains we are making.
Okay, but when you look at these external forces and outlook, what are the current economic realities? What do investors here at home really think about where the macros are heading? These investors, whether they're, they also read these numbers and all of that. They read this, the numbers and the outlook from Fitch, from JP Morgan. What are they thinking? What are you hearing? What are their thoughts?
Yeah, for domestic investors, we really don't have much choices. We are here and we are here for life. And we really do not have, because our currency is not convertible. So it's not as if when you have heightened concern, you will go and invest in London or go and invest in America because our currency is not convertible. So what we do is we shift our investment. We move our investment portfolio from one portfolio type to another portfolio type. If we think there's a heightened risk, we put our monies in fixed income, federal government debt instruments. Depending on our assessment of what will happen in the exchange rate. Today, most investors, for instance, we in Carrier Asset advising people, look, today you can actually take a Naira position instead of take a dollar position because we don't expect Naira to devalue by up to 20% before at the end of the year. But you can actually get a effective yield of more than 20% on your investment in 364-day treasury bills. So we're telling people take position in Naira, hold position in Naira instead of hold position in maybe Euro bond or any foreign currency asset. So we are actually limited to playing within the available asset classes within the economy. So what should concern us is what do foreign investors think? And what I think foreign investors think is that they are at best on the sideline watching to see how the global economic conditions evolve and the impact on Nigeria. If you look at our capital importation, you see in terms of foreign direct investment, it has remained low. We have not been able to attract anything material in terms of foreign direct investment. And it was worsened by the pronouncements which JP Morgan said, which in our economic outlook, which we did on the 15th of April, we were very clear on what could happen because of the tariff impositions by Donald Trump.
Okay.
So in summary, global investors are on the sideline, not just about investing in Nigeria, but about investing in most emerging economies. But for local investors, what we do is that we adjust our portfolios to minimize the risk or inherent in the portfolio.
Great. It's been quite a heavy drill down, as always, with you here on the show. We appreciate those insights and your professional viewpoints on the macros and the markets. Enjoy your holiday evening. Johnson Chukwu, the Group CEO at Carry Asset Management. Thank you very much.